everybody. Welcome back to another week of The Girls Table, a podcast where founders, careers, and investors share their stories. My name is Alana Gold. I am a partner at Redbeard Ventures, the founder of The Girls Table, and I am also your host of the podcast. Today, I'm joined by Steph Mui, the founder of PIN, Power in Numbers, a VC-backed company that enables communities of people, including people from Stanford, YC, Sequoia Arc, Coinbase, and more, to invest in startups together. She is passionate about enabling more people to become founders and startup investors by increasing access and education with PIN. She also writes Demystifying VC, a newsletter for founders navigating VC fundraises and angel investors wanting to learn about early-stage investing. She also formerly worked in venture capital at the investing team at NEA and helped invest over $150 million. So, Steph, thanks so much and welcome to the Girls Table. How are you doing today?
Thanks for having me. I'm really excited. Appreciate it.
Yeah, of course. Well, excited to chat. Before this, we were obviously just talking about how you were out in New York City, and let's just take it back. I'd love if you could share a little bit more, if I missed anything about your background and how you initially got started in venture.
Yeah, the super long story short there is I think since I was really young, I was really interested in startups actually through a really nerdy hobby of inventing that I was forced to do actually through like a public school program that evolved into a hobby that I love doing with my family. And from there, that was kind of like my first foray into learning even like what a startup was, what inventions were, like how people built like new companies from the ground up. And I went to college thinking I was going to pursue something in entrepreneurship, took a huge left turn by accident, ended up going into finance and banking instead. And I was still in the TMT kind of area, but realized very quickly that doing like M&A and financial models for large companies is super, super, super different than working with founders and actually being close to the companies and learning about the day-to-days of the people I admired most. And so that was ultimately what inspired me to go into venture after banking instead of what I thought was going to be a long private equity or buy-side hedge fund path. And then from there, wanted to go even deeper. And so ultimately found that starting a company was kind of where I wanted to be, and was fortunate enough to be guided there through Stanford GSB, a side project I did there, which ultimately grew into what is currently PIN, my current company.
Was there a day that you officially decided you're like, okay, I'm gonna leave like NEA, this like very stable job, and just go out and go start building PIN?
So no, and I'll tell you, it's really honestly very messy. This is like and I'll be honest, it was really hard. And I think people, in retrospect, it's, I can say that even with myself, the best decision I ever made, legitimately, just given how much excitement I feel day to day. And in some ways it feels like I wasn't meant to do anything else. But I'll admit the kind of journey to deciding to do this was really, really messy. Without going like too much into the weeds, I was at NEA. I really enjoyed it. I actually was loving the day-to-day, and I think being in VC is some of the best career exposure you can get, especially when you're a young person. And I was really sad to give that up. And frankly, I think the only reason why I left when I did was I had gotten into Stanford GSB as a college senior several years prior, was due to go that year. And so I was kind of in this go or no-go decision where I either had to literally go to GSB that year or I had to give up the spot altogether. And I think, frankly, it was the fear of giving up the spot that ultimately kind of gave me the momentum to leave, which then kind of caused all these other things to happen that led me to PIN now. But I'll be honest, I think taking the leap into entrepreneurship still is really scary. And I admire anyone who makes the very bold decision to just quit their job cold turkey to dive right in. It's really hard.
Oh, I think a salary is so addictive, I guess. Like, it's like a drug. You feel like you need it. You want those like every weekly salaries, you know what to expect. And so I think like taking that and taking this job that's looked at, so like they highlight it as, oh, it's the best job to get out of school, whatever, then going and being like, actually, I'm just going to go bet on myself, is a huge like risk to take.
Yeah, the Golden Handcuffs thing is super real. And it's funny, like looking back, I remember when I was in banking and chose to go to VC, which again is VC to your point, super stable job, very hot job, especially now. But I remember all of my other peers were going to like private equity firms and hedge funds and other things, and like going to VC, which was, the lowest paid type of buy side opportunity. Even that was seen as like taking a step back, if you will. And so it's ironic, like I would kill for a VC salary, stability of VC. But it's all relative. And so I think it took me a few steps to get here. But to your point, I totally understand because have grappled with that concept many times. And my short finance stint.
Yeah, so that's awesome. So I know I said a little bit about what PIN is. I would love if you could kind of touch on, so what exactly is it? What made you eventually want to start and really building this?
Yeah, so PIN in its simplest form is essentially a platform that enables any group of people to easily invest in startups together. So we create things called community investment clubs where individuals can come together and essentially invest in things that they care about. The most popular use case is alum kind of coming together, whether it started off again with my Stanford GSB class. I can go into a little bit of that story in a little bit, but it's literally for company alums like Coinbase alum coming together to invest in Coinbase startups or in crypto next generation startups, and then also for founders themselves who want to invest in each other. So we're seeing a lot of traction. YC and Sequoia Arc are two examples where groups of founders, whether they meet through a formal investor or program or just like founder friends themselves who realize, wow, we actually have an amazing peer group here. How do we facilitate easy investments in each other's companies? And they can use PIN to seamlessly do all of that. The legal, the admin, the tax work associated with having to do all of it instead of having to start from ground zero, which is where we did at Stanford GSB when PIN was first getting born.
Yeah, so talk a little bit about that. Like, where did it come to be? Where did you start planting the seeds? And ultimately, what year was it that you decided to go out and start building this?
Yeah, so funnily enough, PIN was like never meant to be a company, and you'll see kind of from this like very lumpy story that it was really kind of an accident and something that really pulled me into it rather than the other way around. But the long story short is, having come from VC before going to business school, I was fortunate enough to get kind of pulled into actually an initiative that a couple of my classmates were pursuing, which was how do we create a giant class fund for 400 of our classmates to invest together in the 20 to 30 to 40 startups that come out of our class every year. And part of the observation was, there are lots of kind of like small angel groups and VC funds that have always come out of Stanford, but nothing that had ever been done on a big scale for like a big group of people to do it all together. And the reason why they were excited about doing it, and I think ultimately the thesis ended up becoming true, which is one belief is that it would actually strengthen the community. So of course, when we were all on campus, very easy to stay in touch and stay connected. But after we kind of leave and all go kind of across the world, how do we have kind of like a binding force to kind of keep our community really strong? And then the second was, we were all each other's first investors, co-founders, beta testers, like connectors, and it was kind of really unfortunate. And this is what really resonated with me as well, that our classmates would go on to raise these amazing rounds from great VCs, but almost the people that were there with us, like from literally like day zero, had no kind of ability to kind of participate in that journey after that point in a meaningful way, especially from a financial perspective. And so that was kind of the initial thesis. It's like, how can we actually create some vehicle for all of our classmates to share in the upside of our other classmates having been along this journey from day one? And so we've spent basically a year and a half trying to figure this out, mostly because 60% of our classmates were unaccredited, and therefore we were ineligible to use traditional fund structures and SPVs and other things. Equity crowdfunding is something we looked at, but we found that the legal and financial hurdles that founders would have to go through was something that was going to be a non-starter for most people in our class. And so we knew that we needed something super founder friendly and easy to use, but also something like economical and super easy for us as the members and investors to manage. And that's ultimately what formed the 2020 fund, which was the fund that we formed for our class, which we launched in June 2020 after about a year and a half of kind of like legal back-end work. And then the kind of quick story from there is that everything kind of came together throughout COVID. Other MBA programs and then other companies, other communities, groups of founders, et cetera, started coming to us asking how to replicate the same model. And originally we would send out this literal like 25-page Notion guide that people would then kind of go off and try to do it on their own. But frankly, all the like legal and fund admin and everything was too big of a hurdle for people to do separately. And that's when we realized that there was a really interesting opportunity to kind of improve all of that with product and operations and put it together all under one roof and make it more efficient for everyone. And so that's essentially how PIN was born, based on that kind of very long path.
No, that's amazing.
Yeah.
I think some of the best founder stories is like really you were trying to solve the problem yourself and then ultimately go to market as, hey, other people wanted to use the product that you kind of built for yourself that you solved. So that's super exciting. So I'm curious because my first question was, okay, you have to be accredited, as you mentioned, in order to invest in SPVs, invest in funds. So how were you able to work around that? Like, what is the workaround for that?
Yeah, so just to be very transparent, there are still limitations in the sense that, for example, certain states are ineligible, or people from certain states are still ineligible to use the structure. And there are other things that we have to do to make sure that we're compliant and responsible. For example, like the reason why we're so focused on communities is that like public solicitation still isn't allowed in this model. And we want to make sure that everyone who's involved in these communities are connected to their community, have a very kind of strong awareness and sophistication about what they're investing in and who they're investing in. And so all of those things still need to be true. It doesn't open up the floodgates for any unaccredited investor yet to participate, which I think is actually a good thing, just to make sure that we are also responsibly kind of pushing this mission forward, even though our long-term goal is to allow for any unaccredited investor to kind of participate. But the high level, long story short, is that we're slightly different than a traditional fund, nor are we an SPV. So instead of a traditional fund or an SPV, frankly, where there's kind of one or a team of decision makers, partners, or GPs, if you want to call them, and then a separate group of LPs, limited partners, who put in the money, instead of those two roles being distinct, where LPs passively put in their money and GPs usually make all the decisions on behalf of that pool. The investment clubs that PIN set up are much more democratized and open, meaning that the LP is usually also the GP and actually has a role in actually deciding what the group collectively invests in. So for example, taking my Stanford class as an example, whenever we actually have a vote, whenever we have a company become eligible to be invested in, we literally send out a notification to all of our classmates and give everyone the opportunity to actually vote on that underlying investment. That plus some other stuff that we do on the back end allows for the ability for unaccredited investors to actually opine on the investments and therefore have the ability to invest alongside the accredited investors in the vehicle as well.
But I guess, like, what's the difference between that then and an SPV that you're just investing on a deal by deal basis? Is because you already pooled the money together and now you're just making the decision, so you're technically GPs, or is there something else that you're able to do?
Yeah, I'm not super sure on the SPV front. I don't know if it's like the lack of transparency per se that like there's still kind of like a G or I guess like a managing partner of the SPV who's making decisions on your behalf rather than the investment club where everyone kind of has full visibility into what the group is doing and what they're investing in. And so it's more like a DAO if you're familiar with like the crypto kind of wave of DAOs.
That's exactly where my head was going. So it's really an investment DAO, but you're able to invest in startups with the DAO, as opposed to just investing in crypto, NFTs, whatever else DAOs were used for in the past.
Right, exactly.
And then is it all done in the platform? So like you have to get 50% vote at least to go out and then use the money that the fund has to invest?
Yeah, so 50% majority is absolutely the bar. Something that I think our product does really well is we literally used to have to collect votes via like Google spreadsheets and Airtable and emails, like very manual way. And I think that was part of our observation. Like allowing this inclusion is really awesome, but the hurdle to actually logistically managing all of these different stakeholders and collecting votes for every deal was really cumbersome. And so the cool thing about our product is not only do we make it super easy to form these groups, but also to remain compliant over time. So whenever we have a vote opportunity come up, everyone gets pinged via email and text. And therefore we have over like a 90 or 95% response rate because people can seamlessly vote very easily with like a couple clicks on their phone rather than having to, deal with a very cumbersome login or software.
And I've seen a lot of DAOs be able to like delegate votes. Like, let's just say you're just so busy and you're like, even if I could text, I just don't have time of day. Do you guys allow that, or each individual has to at least up to 50% be approved?
Yeah, it's the latter. Unfortunately, for fortunate or unfortunately, you're not able to officially delegate your vote. We certainly find that people are like influenced by their peers, and I think the coolest thing actually about being so community focused is that there's usually such strong alignment amongst the members and what they want to invest in. We try to make it as easy as possible for people to make their members aware of what they're investing in and have ultimate transparency so that, when they're signing up for a vehicle, when they commit their money, they know exactly the types of companies their funds are going to. So when it comes time to an actual vote, it's more of like a check the box, okay, approve it to make sure that it aligns with what I already agreed to, but because you already had agreed to it, we find that there's a very high approval rate from that initial investment and then the actual votes as they come up.
Yeah, because a lot of times with DAOs, you're seeing that like decentralized autonomous, and that autonomous piece is like the struggle between a lot to be able to actually automate a lot of the tasks. So who's like running it, sourcing the deals? Are they getting like a bigger piece of maybe like the money that's involved or the carry that's involved in the fund in order to actually organize and run it?
Yeah, so we do similar to how GPs manage the fund. I'd say we have administrative partners. The main difference is that administrative partners don't make decisions, investment decisions on behalf of an entire VC firm, unlike a GP at a traditional fund. But that administrative member does do a lot of the logistics. So for example, we automate a lot of the back end stuff, but they're the ones that we coordinate as the main point person. They're the ones who are signing the term sheets on behalf of the entire group and actually wiring the money, things like that. And so for that, a lot of the administrative partners, and it's very much community dependent, depending on the culture of their group or the members kind of voting on what they think is fair compensation. But a lot of them receive fees and carry just like they would as a GP at a regular fund.
And I know obviously this is a big space. You've seen a lot of competitors like AngelList, Carta, they all do kind of this SPV fund administration, but they're not really working with like non-accredited investors. You obviously see like WeFunder and some other ones. How do you guys compete against those? Are you seeing any of the other products right now building what you guys are?
Yeah, I would say not directly. And actually, I think what's interesting for us, like we don't have any direct competitors per se, in part because I think we were the ones who pioneered this for like our very specific problem. But I think one of the things that we have faced is Angel is obviously incredibly dominant and a company that I respect highly. Same with WeFunder and the crowdfunding platforms on that end. And I think people are learning about this as an opportunity and structure for the first time. And so weirdly, like our competition is not like them per se, but rather just like educating this market that's very used to kind of those two extremes that are now learning about PIN for the first time, and something that we pioneered at Stanford and now kind of exploring with other groups. And so no direct competitors, but we very much view a lot of their missions as being very complementary to ours and hope to kind of expand the investment space more broadly.
Yeah, because we use AngelList, and the first thing you have to do is either select one of the accreditations. They don't make you prove it unless you're investing in a fund that's like a 506c, or there's a couple other reasons that they make you prove your accreditation. But I haven't seen them yet jump into this space, which I think is a completely different market, which is this non-accredited investors. And how do you get the typical person who might have some liquidity, likes investing in stocks, be able to get into these private companies, and then having somebody who you mentioned who's really like running, sourcing deal in your community that you trust, that you can invest in. So that's super cool. How many of you guys at Stanford decide to go out and build PIN?
Yeah, so do you mean how many participated in the original fund, or how many spun out to PIN in particular?
To PIN in particular with the company, yeah.
Yeah, so actually, weirdly enough, that's just me. It's our original 2020 fund co-founding team. We had 6 of us essentially, and all of us ended up going into either VCs or becoming founders ourselves. And funnily enough, kind of speaking to your earlier question about the background and how we ultimately ended up at PIN. Funnily enough, I actually didn't even work on PIN as a full-time company immediately after 2020 fund. I was working on something completely different in the consumer tech space. Really had no kind of prediction that this would turn into a company, and really what compelled me was seeing kind of our TechCrunch article come out about 2020 fund. All these people, literally at least 1 or 2 a day, come in consistently over the course of a year and a half, that I was like, wow, like we literally haven't touched this article in a year plus. We don't advertise this at all. We don't even have a website. People are somehow organically finding this and finding our emails through LinkedIn or whatever means, and getting in contact with us, which really signaled a kind of a market demand there. But yeah, funnily enough, it's been a very long, interesting journey since then.
Yeah. So you mentioned some of the automation, like obviously the texting and being able to get people to vote, also meeting them on email. So kind of meeting where people are at. What's in the roadmap for you guys for the future to be able to really just like bring on as many funds as possible in different communities?
Yeah, I'd say it's 2 things. So one is directly about how do we actually create these vehicles and make them cheaper and faster for everyone. So for example, one big thing that we've been working on for the last few months, and perfectly timed for tax season, is how do we make the back end and supporting kind of like the tax obligations of the vehicle and the forms that we have to fill out, et cetera, much more efficient. Like one of our biggest observations from running 2020 fund is that that is our, by far most significant expense. And when we dug into, okay, working with this tax firm, why are they billing us this certain number of hours, et cetera, we realized a lot of the work that they were doing was very manual, and in part because we had also manually created this fund. We didn't have a tech platform that seamlessly organized everyone's information in a certain way and made it easy for them to upload and organize themselves. And so what we found basically now with PIN, now that all of our clubs kind of use PIN and onboard with us, all their members as well, we can categorize their information in a much more seamless way, and actually save the CPAs that we work with tons of time on actually doing kind of the tax forms every year. And so that alone, along with some scale now, has reduced tax obligations for our tax costs to fill out these forms for our groups by 20 to 30% conservatively. And we hope to continue to build tech to do more there. And then I think the second part that we're really focused on now also is like, okay, once we actually raise the club, how do we enable these groups of people to powerfully help companies to then therefore continue to win the opportunity to invest in great founders? And so we have some awesome features now that I'm super proud of. One being the bounty program, where founders can actually issue asks like, hey, we're looking for an engineer hire. Hey, we're looking for an intro to this investor. We're launching on Product Hunt tomorrow. And we actually make it super easy for individuals to post on social media, refer candidates, et cetera, all for kind of rewards. So we make it into like a fun gamified experience where people are not only engaging with each other, but also getting to know the founders and helping them in a seamless way. And so we hope with AI, we can do even more with that, more personalization, more ease of use to facilitate helpful intros, all that kind of stuff is in the roadmap.
Wow. No, that's super exciting. I feel like you're really building communities within the platform. How does it work in terms of capital calls, or is all capital called up front, or is it a rolling fund? What's the typical structure of the different funds?
Yeah, so all the capital is usually called upfront, and part of that is because the fund sizes that we support right now are usually are on the smaller end, right? Like to give you a sense of our average vehicle size, it's usually anywhere from like $1 to $5 million, maybe a little bit more than that, and they deploy pretty quickly and say anywhere from 1.5 years to 3 years. And so historically, speaking of a lot of individual checks, where the average check size for an individual is like 10 to 15K. Historically, I've called the money all up front to avoid kind of extra headache for the leaders and to make sure that the community is super nimble and being able to chase fast deals in the future. But now that we're starting to expand and see people raise future funds, so on and so forth, I think capital calls and allowing for more flexibility in that is something that's coming hopefully in the next year.
And then how many funds do you have on the platform today?
Yeah, we're not revealing like specific numbers, but I'd say a few dozen is usually where we what we like to say, and they vary a lot from school groups to company groups, and founders are kind of like the main three. And then lately we're seeing a lot of interest groups as well. So people coming together who are really passionate about climate, for example, or AI or gaming, or insert whatever category here. That's a growing segment of what we're seeing as well, which is super exciting to see.
Have you yet kind of create a way to find other funds that you want to invest in? Or right now it's more like, hey, that person comes with their community, they share it out with their community, and then they bring them on the platform?
Yeah, it's more that. I mean, our hope in the future is that we start to take more and more of those groups. Like something that's really interesting for us is like we're talking to a lot more angel groups who are interested in, who previously before were 100% on SPVs, are interested in forming like a loose structure where all their members would have at least some skin in the game to a certain extent of their capital, for example. And other models like that, where traditional VCs, for example, we're talking to them about building scout programs or sharing carry amongst portfolio company founders, or even building kind of sub vehicles with PIN in a network that they're really tapped into. Say they focus on AI and they want to give their kind of AI operators and partners that they work a lot with skin in the game as well. We're seeing a lot of them kind of take interest in PIN for kind of expanding their core fund structure. But yeah, early days in that so far. Most of it right now is communities who are bringing PIN to their community to raise on, which is really cool.
No, that's all super exciting. So taking a step back, like you're at Stanford, you started the 2020 fund, you started now building PIN. How did you go out and raise capital? Do you have any advice for kind of founders who are looking at raising capital, and just overall, what was that process like for you?
Yeah, it was, it's a lot. And I say that having come from the VC background too. I felt, on one hand, I think more prepared maybe than the average person, just given, other people have skills in marketing or growth or product. Like VC, I was like, okay, great. Like fundraising will be super easy for me because I've seen the other side of the table. And, I don't think that was fully the case. Like fundraising still to this day, despite my experience as a VC, is like the most stressful time, of company building, which is funny because there's lots of stressful things when it comes to company building. But I think it's frankly just like the anxiety of constant rejection, conflicting feedback, like the ups and downs are kind of, I think, extra present during fundraising weeks. And so for anyone who's going through it or about to go through it, just know that I empathize with you a lot, and no amount of experience, especially having been on the other side of the table, alleviates that fully. And so I empathize a lot with that. In terms of advice, I feel like the thing that I did best was really kind of maintain a process. I think one thing that I see a lot of first-time founders do is that they take a lot of inbound meetings from folks as they come in. You know, they'll update their LinkedIn, and investors will kind of contact them, and they're excited to talk to investors, and so they'll kind of take these meetings in this one-off cadence without kind of a lot of structure. And I think what I have found, at least for me, to be really effective is rather than kind of taking inbound as they come in, really kind of taking control of the process and running a process, meaning like actually scheduling a whole bunch of meetings intentionally over the course of, say, 2 weeks, leaving time for follow-ups and things like that, being very intentional about showing your interest in working with the VC that you're most excited about, and frankly, using the momentum of the process and interest you're getting from different people to kind of push the process forward. And a big part of that is like VCs are really busy. I mean, I'd be curious about hearing your take on that as well. You're probably looking at like 20 companies at the same time. Yeah. And naturally, the ones that are moving the fastest are going to be the ones that are getting your attention because they're the most time sensitive, right? And so I think part of it is just being very intentional with your time and thinking ahead to make sure your process is the most efficient, and you're not spending like all of your time fundraising alongside building a company, but rather condensing that into obviously hopefully a more contained kind of few weeks rather than ongoing for many more months.
Oh, I feel like it's 2 jobs in one. It's so hard. I'd say also, like, I think a lot of founders use your network. I feel like if you go on LinkedIn and you see like a partner at one firm is connected with somebody that you might have not spoken to in a while, like, don't have any shame in asking for an introduction, because the chances of like a VC taking a call with somebody who actually made an introduction, I feel like, are like 80 times higher than a random LinkedIn message that somebody has gotten like 50 times that day and just kind of blends in together. So I feel like sometimes, like, I've seen a lot of founders be scared, but it's like, this is like the perfect time to use every single person in your network to help you kind of close this out and really get those warm introductions too.
Totally. And that's actually a great point. I'm just realizing that naturally a lot of people also, non-VCs are also like this, but I feel like intros feel special in some ways. Like, VCs are trying to constantly uncover deal flow, and I feel like cold messages can sometimes come off as like really broad and unpersonalized in some ways. And so I feel like sometimes to your point, I feel like introductions, even if they're kind of like loose introductions from acquaintances or whoever, like feel more intentional. It seems like you kind of purposely targeted someone to try to meet them for a specific reason, even if the specific intro is not particularly strong. So yeah, I love that. I think that's really smart too.
Oh, for sure. Yeah. So you raised your pre-seed round and a seed, or right now you're going to go out soon and raise your seed? Yeah. Where are you guys at?
Yeah, we raised our seed round last year, about a $5.5 million round total. And so, and we'll not be raising for a little while since we're just, focused on building the stereotype of early stage founders. But that was a really fortunate kind of round for us, where I think we got not only the capital, but like kind of the right people around the table to kind of help us bring us to the next level.
That's amazing. Are you technical at all with your background? Did you bring somebody in kind of technical to help with coding and help get the website and everything else together?
Yeah, it's the latter. I'm a non-technical solo founder. And so that's, I think, naturally a challenge. And I think kind of to your earlier question about like my VC background and how that impacted how I thought about the raise, that was one thing I knew going in was going to be like a huge negative against me, just because I understand a lot of investors want co-founding teams, and then also the balance of technical and non-technical folks for tech products. So that was certainly a challenge that I was worried about. But I think what really helped me is the fact that we had kind of at least a couple of years of proven demand. Like, even I was running actually another company in the consumer tech space, like I mentioned, with like 99.9% of my time. But in like the 0.1% of my time, right, me and my old co-founder from the 2020 fund had written this Notion doc and had sent it out and actually helped those folks create their own vehicles. And so by the time I ended up going out to raise for PIN, I was able to say, hey, like, look at these dozen or so groups that have popped up already based on our learnings from the 2020 fund. Here is like another list of 200 people who've reached out about interest about doing the same thing. So I think in lieu of not being technical and having no tech product at the time, being able to show the demand and interest over a period of time was kind of what made up for it in my case.
So then how did you go from like not being technical, being able to raise to them finding either a technical co-founder or somebody technical that was able to build out your vision?
Yeah, it was hard. That was our hardest hire.
Mhm. Oh,
With
it
lots of
always
trial and
is, I
errors.
feel like.
It always is. And so
Mhm.
actually I'm very, very lucky. Our founding engineer, his name is Tyler. He's amazing. And actually, I think if anything, like bringing him onto the team has really made me appreciate that on paper resumes like really do not correlate with like the strength of someone as a team member, especially for the early stage. Not that he doesn't have an amazing background. He's very smart and graduated from an amazing engineering school and had great work experience, but he's relatively young. And so I was not nervous, I would say, but I've been endlessly impressed with the level that he performs at. Like his years of experience would say that he's at a certain level, but he operates like much more like a leader and has continued to bring on great people and build out great infrastructure and like help us see around corners for things that I never would expect. And so I rely on him so much for technical expertise. And so if anything, to your point, it was our hardest hire, but it was probably the most impactful. And yeah, very fortunate to have him still on the team today, still leading the charge on that.
Yeah, I'm not surprised at all that you say it's the hardest. Really, I think finding somebody who like believes in
Yeah,
your vision, because like technical people could get paid a lot of money to work at different companies, jump into a startup and actually like get their hands dirty, knowing that like you are a startup, it is a hard business, and like really being the person to build everything. I think it's like a vision that you have to sell everybody as you're kind of recruiting and
100%.
finding the perfect person. So what's been like the hardest thing so far? Like we've mentioned a couple, obviously, but I think like being a founder, like nobody gives them enough credit. Like I feel like I've obviously have a ton of founder friends, and it's like you really have to like pat yourself on the back. Like I am best friends with a guy who's like super successful, Series C company. And it's like even then he closed like the biggest like possible sales cycle. It did like 3x all the sales for the year. It's like he's still to go ahead and like tap his shoulder and be like, oh, good job. Like I did well. Like nobody else is saying it to you. The board's just waiting for the next kind of money to come in and hit the next milestone. So
Mm.
as somebody who worked in VC, made the switch over, obviously had a great background, what's been the hardest thing for you during the process?
Oh man, I can resonate with that a lot, in the sense that, well, especially being a solo founder, I definitely resonate with the idea of things being a little lonelier in this seat. But I think actually the hardest thing to me is, I feel like VC, there's a different level of kind of emotional waves, if you will. Like your highs and lows are just more narrow. Like, of course, there are hard things you have to do, like reject great companies, and it gets really busy. And I certainly had times in VC where I was really stressed out and overworked and things like that. But I think with being a founder, like the biggest shock for me, which I should have probably thought about earlier and probably seen, but I feel like the highs and lows are just so much more great and scrunched into a much smaller period of time. So literally, I could go from having like the most amazing morning to the most depressing afternoon to feeling like really excited again by evening. And that happens like very regularly based on every little signal. And I think part of it actually is exactly what you said. Like you have much less external, or rather the way that you get validation in building a company is like all the feedback that you're getting constantly from your team, from the external people that you're serving, from users. All these kind of pieces of feedback are coming towards you, and you just have to ingest it. And I think that's what causes kind of the ups and downs versus like if you're working in VC, maybe the feedback cycle wasn't as short for me. And so the emotional bandwidth that I have now versus when I was in VC is just different.
Yeah, that when you're saying that, I'm like, I so see that. Like, I could see how it's really like, okay, you have something great, then it's like, okay, back to work, and then something terrible could happen, and like the whole website shuts down. Who knows? So I could definitely see how that could be like. I've never really thought about that too until you just said that. And then, I guess like the last question I'm wondering, but like, if you could give advice to your younger self, or there's something that you want your younger self to know, what would it be?
I think it's two things, and both are, or well, I think one is more cliche than the other. The first, which is, I just started like posting publicly, mostly because of PIN in like the last year and a half, and partly it's out of need in the sense that our product is super, it's like hybrid consumer B2B, I guess, but you know, people who are working in tech are essentially our main target demographic. And so we have to get out the word somehow. And so as a personal challenge, like we started posting more as a company, but I also started posting more personally. And I feel like not only has it been amazing, I mean, it's literally gotten us, besides word of mouth, all of our distribution and all of our new leads in terms of communities that have come on successfully raised. But I think the other thing is too, like I've had so many kind of serendipitous meetings with amazing people I never would have met otherwise. And I think a lot of that is, I forget the exact quote, and I refer to it all the time, so I should probably figure out what the quote is. But it's basically talking about like by publicly posting, you yourself are making yourself like a light tower, so you can attract other people who are similarly minded to you or who have shared interests or who are excited about collaborating with you, versus if two people never post, right, they might not ever discover that they have this mutual interest and connection. And so I think in some ways, like putting myself out there has like opened up the doors to a lot of relationships I otherwise probably wouldn't have had. So I'm very fortunate for that. And then the second thing I'd say is, like, this sounds really, really cheesy, but I wish I had followed my gut a little bit more and pursued things that I genuinely found interesting and fulfilling earlier on. Like you can probably tell from my background, just having gone to banking and business school and all these things. And granted, I'm very fortunate that they all led me to where I am now. I also am like, you know, I always wonder what would have happened had I taken more risks earlier on and hadn't waited so long to start something, which is something that I knew I always wanted to. And so I wish prestige and kind of like the formality of traditional jobs was less emphasized in school, and kind of encouragement to pursue things that are more risky, less traditional, et cetera, especially while you're young and you have that bandwidth, you know, more so than you usually do when you're older and have people to support, for example. I wish that were more emphasized. And so I would tell myself to be less scared.
Yeah. I mean, I agree with those two. I feel like those like spoke to me. I'm like, yes, I hear you. That's so true. And I think so many of us at school, we either look at like investment banking and consulting were huge for me. So I went to consulting. If you were to ask me back then, like why I went to strategy consulting, it was really like, oh, because like everybody wants this job. So I want this job. And like schools don't do enough of like, but what do you actually want to do? Like get out the corporate life, get out the safe job for a second. Like let's unpeel that. But instead they're just like, oh no, like Big Four is great, or like investment banking is great. And it's, I think like schools, I mean, the education system's broken, but like schools specifically, like there should be mentors in school that really help you figure out what you want to do, as opposed to what you think you should do.
Totally. I totally resonate with that, especially because I'm like, wow, thinking about all the very safe internships I took while I was in school, I was like, that was so dumb, because internships, especially internships, are like the most like riskless thing that you can do. And I wish I had just done more crazy things, because I feel like for me at least, like academic classes didn't give me a strong enough sense of like what I wanted to do versus work experiences. And I feel like, yeah, everything was about kind of chasing the most prestigious internship or whatever it was. And I'm like, that's so silly. I feel like those are like the complete free passes that you have in your entire life, and you should absolutely take advantage of those. So
yeah, I agree. I think more people need to, and that's so true, where they really are the safest things. It's like you could go do whatever you want, nobody cares. I remember my sophomore year, I was going to go work at Bloomberg, and my mom's like, oh, Alana, you're a sophomore, you could wait until junior year. It's like your last summer not working, do like whatever you want, like don't go. And I was like, but I got this like great thing, and I worked at Friendly's my freshman year, so she was like, just go back to Friendly's, do whatever you want, like you're young. And I went, but it's like, yeah, people really should just do whatever they want. Like you have like your rest of your life to like, if you want, work a corporate job or do whatever, like it's the best time to figure out what you want or like try something new.
100%. It's, your mom is so wise. Okay, it's always like they've lived through it, they know, and they always say that to their younger selves or their sons and daughters, and it's like we'll never listen until we go through it ourselves. But yeah.
Oh, so now I'm like, damn, I wish I had a summer to go be a server at Friendly's. Like,
yeah, totally.
Awesome, Steph. Well, I love what you're doing. For anybody who wants to follow you along on your journey, obviously you've been building in public, you've been growing. I've loved watching your journey. Where can people find you and follow along and get in touch with you?
Yeah, I think the easiest way is on Twitter. My handle is Steph, Steph, Mui, my last name, Mui, or in LinkedIn. I'm really bad at responding to DMs, but I am pretty good at email. And so feel free to reach out and I can direct you to my email as well.
Awesome. Well, thank you so much for coming on. I love sharing your story, and I'm excited to follow you along on your journey. So thanks so much
for having me. Appreciate it. Thank you.
Bye.
Bye.